Well, hello and welcome back to Principles of Accounting 2. I'm your host, Dr. B. Uh, we are in our we're in the fourth week already, if you can believe that or not. The time is just going by so quick. Today we're going to be talking about job order costing. Before I jump into today's lecture, I want to quickly highlight where we are in the classroom and where we're heading. So in the classroom, under course content, we are still in Module 1. We are now in Week 4. In Week 4, you'll find today's PowerPoint presentation, some sample exercises. Now remember, the exercises, those are not graded. They're just there to help you to understand the content. They're just for practice, okay? So you don't worry about submitting exercises. That's just for practice. And we'll have the Chapter 9 homework assignment, which will be due this Sunday night. As a quick reminder about homework assignments and quizzes, remember you have 2 attempts on each homework assignment and each quiz. So if for whatever reason you are not satisfied with your score on a homework assignment or a quiz, please feel free to take that again and try again. Also, if you need like a refresher and you want to, study a little bit more, feel free to review the homework assignment and the quizzes just to kind of get a better understanding. So, having said that, almost everyone has been on time with their submissions and all that good stuff. So please, please continue to try your best to make sure that your work is submitted on time. You'll have something due pretty much every single Sunday for each week, right? And we kind of got that by now. The best approach to completing homework assignments and quizzes, of course, is to review each question and then to go through the presentations, your notes, the lectures, the book, try the exercises, and then attempt the homework assignment or the quiz. But the homework assignments and quizzes, as you know, they're designed the same exact way. There's about 5 questions on each one. You get again, there's 2 attempts for each homework assignment and each quiz. So if you're not satisfied with one of the grades that you've already received, go ahead and take that again, okay, to try to earn that higher mark. That will certainly help along the way, because I want to make sure that you have the opportunity to earn the highest grade possible in this course. Okay, so those are my housekeeping notes. So let's go ahead and jump into today's discussion, which is on job order costing. And as I had said toward the beginning of the course, I want you to have a certain mind frame, if you will, when we go through these lectures. And primarily, I want you to think about manufacturing. Manufacturing those are the companies that make physical products, right? And I used a couple of examples in our previous weeks, and one of those was an automobile manufacturer. So I am going to stick with that example for this discussion on job order costing. Everything we talk about in this class is based off of cost. There's a cost associated with everything, and there's especially a cost associated with manufacturing products. We talked a lot about those costs over the past 2 weeks. You may recall that the total cost of a product includes direct materials, direct labor, and factory overhead. And we know that direct materials, that involves the majority of the cost of raw materials it takes to manufacture a product. In our example, the automobile example that I gave last week was the majority of materials it takes to make an automobile is metal, is the tires, the rubber, is the engine and all the engine components, and that those are the raw materials it takes to that make up the majority of the cost of manufacturing an automobile. And so those are the kind of materials I want you to think about as we go through job order costing. And the other part of cost that makes up the majority cost of a vehicle is labor, direct labor. And hopefully you remember from our discussions last week and the week before, is that with direct labor, it is the employees that are working on the assembly line. They're the ones that are physically touching the product as it moves through the assembly line. Those are the employees that are molding the metal for the frame of the vehicle. Those are the employees that are putting the engine into the vehicle. They're putting the tires on. They're physically involved in the process. That is direct labor, right? They're directly involved in the manufacturing process. And then, of course, the last one is manufacturing overhead or overhead, factory overhead. And so with factory overhead, that would include things like the electricity used for the machines on the assembly line, a little bit of factory maintenance, where they're cleaning the area around the assembly line, supervisor salaries, depreciation for the building, etc. We call that factory overhead because factory overhead cannot be directly traced to the manufacturing process, but it is indirectly involved in one way or another. So throughout this discussion of job order costing, we'll be talking a little bit more in detail about those types of costs. And the primary thing I want you to take away from this discussion on job order costing is the word job order. Think of a job order like a customer places an order for something, right? So let's say we're an automobile manufacturer. A customer places an order to purchase an automobile. They want it specific to that customer. That is called a job order. Okay. And so that job order has the related cost to completing that job. So each car on the manufacturing line is a job. And that's how I want you to think about job order costing. And I'll show you what all that looks like. So again, we're getting to the mindset of a manufacturer. We'll talk about the related costs of direct materials, direct labor, factory overhead, and how those costs are applied to each job. And the job is the customer's order. And so we'll talk about how the job order works. In cost accounting, there are two different methods to cost accounting. One is called process costing, and the other one's called job costing. Process costing, we're going to talk about that next week, but I'll give you a little highlight. Process costing is where we continuously manufacture. Continuous. That's called process, when it's continuous. Process costing, think of it like agricultural processing. The Tyson's, which is a chicken processor, they process chicken, right? They make chicken wings, chicken legs, chicken thighs, chicken products, right? They process the chickens. They bring them in, they do what they do, and they process them to create them into a bag of different types of chicken. Another example would be like a milk processor. They get the milk from the cow. They pasteurize it, they do all this stuff to it to turn it into milk. That's called process costing because it's a continuous thing. They do it regardless of any type of customer orders. That's why you go to the grocery store, you'll always see chicken in the freezer. You'll always see chicken in the butcher department. You'll always see milk on the shelf because they make that regardless of the orders. Sabita, do you have a question? Sabita?
No, Professor.
Oh, okay. Just making sure. Thank you. So that's process costing. We're going to talk a lot about that in the next chapter. But I just want you to understand what process costing is because when we talk about job costing, we need something to compare that to. So process costing is continuous. Job costing is like something that's built to order. Like a car, for example. The customer places the order with the dealership. The dealership places the order with the auto manufacturing facility. And they manufacture that car for that specific customer order. That's what we call built to order. There can be large volume, unique volume, meaning like a one-off. It could be processed in batches. It could be processed, or it could be manufactured in batches for job costing. It could be manufactured in single order by the order, right? Or it could be what we call mass produced. So here's a couple of examples. In the car world, built to order, that's like your Tesla. That's like your specialized vehicle. Yeah, it's built to order. It's unique, and there's only a few of them. Yeah. Mass produced is when that's your Chevy, that's your Ford, that's your GMC. They build a lot of them, and they're all very similar, and that's called mass production. It's a part of job costing because they're made in batches, but they're also made based off the customer's order. So when a dealership places an order with a factory, they usually buy a lot of cars, not just one or two. They'll buy 100. They'll buy 200. They'll buy a couple hundred. And so we call that mass production. The costs associated with manufacturing a single vehicle or a lot of vehicles can be directly traced to each vehicle. So, for example, I can trace my direct materials, direct labor directly to each car. And I can trace some factory overhead to each car to some degree. So, in job costing, every time we manufacture something like a vehicle, I can trace direct materials, direct labor, and some factory overhead. And that's the overall framework of job costing. So here's another breakdown of the differences between job order costing and process costing from an operations perspective. Job order costing is based off of a customer order. The products and services are very similar. Like, for example, with an auto manufacturer, the vehicles that auto manufacturer produces are very similar. There might be different trim lines and whatever, but a car is a car, right? A truck is a truck. A van is a van. It doesn't matter. They're similar in nature. We call that heterogeneous products. They're slightly different, but they're the same in nature. Yeah. Job order also involves lower production volume for the most part. When I am manufacturing a line of vehicles on an assembly line, I'm usually only making maybe 10 at a time. Okay. I'm not making hundreds of thousands. It's lower production volume. So that way my employees can focus on producing a high quality product that is of good quality, because they're only building 10 at a time rather than hundreds of thousands, right? So that's one of the natures of job order. It's highly flexible, so I can go from one product line to another based off of whatever the demand is. And it's somewhat standardized, but it's not high on the standardization. Whereas process costing, it's all the same, high volume. For example, in process costing, I said it's continuous. We continuously manufacture. Think of like a bottle of water. You know how many bottles of water are out there? Millions, right? Millions. You go to Costco, or you go to Safeway, or you go to one of the grocery stores, right? You go toward the back of the store, and you'll see big pallets of water, right? Water all over, water on the shelves, big pallets of water sitting on the ground. This is a result of process costing, process manufacturing. Process manufacturing, it's repetitive. They continuously manufacture it regardless of any type of customer order. It's not based on customer orders. They just keep making it. Okay, it'll sit in a warehouse until it sells, but they're going to keep making it. It's homogeneous, means it's the exact same product. There's no differentiation between this bottle of water and the bottle of water right next to it. It's the same. It's the same exact product. They produce it in high volumes. It's, again, continuous flow. Continuous flow. There's very little flexibility. Like, they're not going to change the cap. They're not going to change the label. They're not going to change the way the bottle is designed. It's very low flexibility. I can't just shut down a product line and flip a switch and change it. It's not that easy. And this is highly standardized, meaning it's the same exact process and procedure I use every single time I run that product. So again, the primary difference between job order costing and process costing is that with job order costing, it is based on the customer order. Okay? A customer order is a job. So when you hear job order, think customer order. It's based on a job. When you hear process, think repetition, continuous flow. Continuous flow, that is what we call process costing. There are, the difference is also in the manufacturing, right? With job order costing, it's based on the customer order. So an example of that would be a guitar manufacturer, an automobile manufacturer, a toy manufacturer. They manufacture based off of orders, okay? If I don't have a customer order, there's a good chance I'm not going to make it, because otherwise it'll just, if I make it, it'll probably sit there for a while. It'll lose value over time. So yeah, I'm not going to make it if I don't have a customer order. That's job order costing. Process order costing, examples would be water, milk, chicken, beef, other agricultural things like pasta, vegetables. They use process. They're the same products. They have a lot of them, and they will process them regardless of the customer's order. So there will be a ton of them sitting in a warehouse somewhere. It's like Chiquita banana, right? So Chiquita, what they do is they gather the bananas from South America. They put them in a warehouse, and then they'll ship them out to wherever they're going, right? And then from there, they'll wind up on a truck to one of the grocery stores. They will continue to get those bananas regardless of who's ordering them. Doesn't matter. They're going to keep doing it, right? It's high production volume. It's the same exact product, follows the same process and procedure. That's process costing. We're going to talk about that in the next week. But right now we're talking about job order costing. So I just want to make sure that you're all clear on the difference between the two, because they're similar, but they are different. Going back to our earlier example of manufacturing a car. As we had discussed over the past few weeks, there are three primary costs associated with the manufacturing of a product. We call these product costs. And that is direct materials, direct labor, and factory overhead. Those three costs are associated with manufacturing a product. We also have things like indirect materials and indirect labor, and those are indirectly a part of factory overhead. This chart, flow chart, shows us how the costs flow through the manufacturing process for each job. Remember, a job is a customer's order. Okay? So job costing tracks all of the costs related to completing that job. So each car that I manufacture is a job based off of a customer's order. And each car has direct materials, direct labor, and factory overhead that I can trace to each car. We call those product costs. And so as my car, is moving down the assembly line, I'm adding in additional materials, labor, and some overhead. And I'm tracking all of those costs on what we call a job order cost sheet. And that job order cost sheet follows the car, the job, as it moves through the process of work in process, then it becomes finished goods, and then ultimately gets sold. There are costs associated with the whole process. And that's what this flow chart shows us. So let's recap the costs. We have raw materials. Raw materials are the materials that have not yet been processed, not yet been introduced to the assembly line. We're talking about raw metal, raw rubber, raw engine parts. They have not yet been introduced to the assembly line. We call those raw materials. They consist of both direct and indirect materials. Remember, direct materials are the materials that make up the majority of the cost of the product. In our example, that would be metal, rubber, engine components. Indirect materials are materials that make up a very small part of the cost, but we cannot directly trace it to each vehicle. An example of that would be things like glue or some adhesive or I don't know. It's so small, right? Or wiring, very small cost. It's associated with the manufacturing process, but I can't trace the cost of each drop of glue to each car. I can't trace the cost of each piece of wire to each car. They make up a very small part of the cost. That's why we call it indirect materials. But raw materials are made up of both direct and indirect materials. Then, when I'm ready to use my raw materials, I take it out of raw materials and I put it into what we call work in process. That's when I'm taking my metal, my rubber, my wire, my engine components. I'm taking it out of raw materials and I'm putting it into the assembly line, work in process, where the job is being produced, the job being each car. When the job, rolls off the assembly line, it becomes what we call finished goods. That's the completed car. Okay? Then when I sell that car, it becomes a completed job, and it goes from finished goods to cost of goods sold, which is on the income statement. Raw materials, work in process, and finished goods, as you recall from our earlier discussions, those are all parts of inventory on the balance sheet. Cost of goods sold is when it comes off of our balance sheet and onto our income statement when we've sold it. And of course, we track the cost of each job using what we call a job order cost sheet. And I'm going to talk about the job order cost sheet now in a little bit more detail. So here is an example of a job order cost sheet. It has the customer's name, their contact information. It has a job number, which is what we call a unique identifier. It has a job description. What kind of product are we making? In this case, it's an alarm system for a vehicle. What is the date promised? Date promised means that's the date we promise this job will be completed by. The start date, when we started the manufacturing process, and the completion date, when we ended the manufacturing process, and that's when it became finished goods. And below that, we can see the direct materials, the direct labor, and the factory overhead that we've applied to this job. Under direct materials, we see a couple of different dates, requisition form numbers, and cost. That's various components used to make this alarm system for this truck. Okay. A couple of different dates, a couple of different requisition numbers, a couple of different amounts of costs. And then at the bottom of that direct materials part, I see a total cost for direct materials. Under direct labor, I see a bunch of different dates, time ticket numbers, and cost amounts. A time ticket number, let me talk to you about that real quick, because I don't think we talked about it last time. At work, when you go to work and you're working an hourly job, you do this. You punch the clock, right? You punch in for work. You punch out for your break. You punch back in, go back to work, and you punch out to go home. And you do that every day for 5 days a week. That's called punching a clock. When you do that, your employer that's how they track the amount of hours you worked. That's how they can tell how much you should be paid, right? Based off of the hours worked times your hourly rate. That's how much they track to pay you. It works the same way in manufacturing. The difference is we track the amount of time each employee spent on working on this particular job. The reason why we track our employees' time on each job is so we can allocate the total cost of direct labor to that job. Does that make sense?
Yes, it does.
Perfect. Thank you so much. That's what time tickets are.
I do, Professor, I do have one.
Mr. Rhodes, please.
Okay, what is the FOH? What's that?
FOH, where do you see that?
Estimated on the sideways. You see how you break it down to calculate it. It's on. It's right here to your.
Yeah. Okay, that's factory overhead.
Okay, I got you.
Yep, factory overhead. You got it. Thank you so much. I didn't even realize that those terms. So DM, direct materials. DL, direct labor. FOH, factory overhead. They're just acronyms to help us to quickly compute it. Thank you for asking that question. I appreciate that. And so now we know what the time tickets mean. What we're doing here is we're tracking the amount of time that each employee worked on this particular job. We'll take their hourly rate times the hours they actually worked. That gives us our cost for each employee. So one employee's 120, another one's 150, 180, 60, 90, 240, 160. I add up all of my direct labor to get my total direct labor cost. The last part is applying factory overhead. Now we know that with factory overhead, we cannot directly trace the cost of factory overhead to each job. So what we do is we use what we call a factory overhead rate. The factory overhead rate is typically predetermined. Okay, it's an application of a cost to a percentage. That's how you get a rate. And so in this example, we're taking 160% of direct labor cost as our factory overhead amount to apply to this job. Totally acceptable. That's fine. You could do it that way. Another way of computing factory overhead rate, you could do the straight line method. You take your total factory overhead for a year and divide it by a base. And you could use the example of the number of hours for the whole year that your company's open or something like that. And that's how you get a straight line rate. We'll get more into overhead later, but I just wanted you to have an understanding of how we compute overhead rates. There's a couple of different methods you can use. In this method, the one in this example, we're simply taking 160% of the total direct labor cost. It's a very general way of applying factory overhead rate. So what we do to figure this out is we take $1,000, which is our total direct labor cost for this job, times 160%. 160%, that's 1,600. So to find the total cost of the job, we take our DM, direct materials, 600, plus our direct labor, DL, 1,000, plus our factory overhead rate, FOH, 1,600. 600 plus 1,000 plus 1,600 gets us $3,200 as being the total cost of this job. And that is the job order cost sheet. Any questions?
No.
Great. Awesome. Very cool. Thank you so much.
I do have a question, Professor.
Yes, Cornelia.
My question is, where did you get that 160%? If we have only, if you have a job finish, it's complete 100%, but where it get at 160%?
Oh, so you're talking about the factory overhead rate. How do we
Yes.
find that 160%? That is what we
Yes.
call a predetermined rate. Okay.
Mhm.
Remember, the total cost of a job is direct materials plus direct labor plus factory overhead.
Okay.
To find the cost of factory overhead, we decided our factory overhead cost is going to be 160% of our direct labor cost. So that is the 160% is a predetermined rate to find the factory overhead cost. Does that make sense?
Yeah. Okay. Thank you.
You're welcome. You're very welcome. Good question. Let me show you how it flows onto the job order cost sheet. How do we get all that information? What does it look like? I showed you what a job order cost sheet looks like in our previous example. We track materials costs and labor costs based off of what we call source documents. You probably remember source documents from Accounting 201, and a source document is something like a receiving report, a packing slip, a purchase order, a requisition form, a time clock report. These are all what we call source documents. A source document provides us with information on the cost, right? So for materials, we take the receiving report and we enter that information into our what we call a material ledger card. Here's how it works. We track the cost for all of our raw materials. So let's say I have $10,000 in metal sitting in my raw materials warehouse. And I use some of that metal in work in process, and I have some left. Yeah. And I'll purchase, using a purchase order, some more raw metal from my distributor and add it to my raw materials. And I'll keep taking out from raw materials, putting it into work in process. I need to know the value of the remaining raw materials at all times. I need to know the balance. Yeah. And so the receiving reports help me to identify that. A materials ledger card tracks the balance of all of our raw materials, what I have left in raw materials. Yeah. And that balance, of course, goes up and down based off of usage. And I do that for all of my raw materials. My metal, my rubber, my engine parts. Yeah. So I track the cost of all those raw materials and how much I have left, the balance. Yeah? And I do that for each type of raw material using what we call a materials ledger card. And we update that anytime we purchase more or use more in production. I take the cost of that raw materials when I use it and I apply it to the job order cost sheet as I'm using it for each job. And then, of course, I add in my direct labor and all of those things onto my job order cost sheet. The direct labor How do I find the direct labor? Well, of course, I'm going to use the time reports, right? The timesheets for each employee. And so I add that in, and then of course I apply my factory overhead. But you see how it flows, right? For indirect materials, it goes on to the indirect materials report within the factory overhead ledger. And when the job is completed, I apply a factor of factory overhead, a factory overhead rate. In our earlier example, it was 160% of direct labor cost. I'll show you how all that works. But just, it flows. On the materials ledger card, I have dates of when I purchased or issued. I have when I'm receiving additional raw materials, I'm adding to my raw materials. I have a receiving report number, how many pieces of raw material I got in, the cost of each individual piece, and my total price. We see I got my total price by taking the unit price times the number of units. And then when I take it out of raw materials and put it into work in process, I'm issuing it. Yeah, I'm issuing it from raw materials to work in process. And so I'll have a date for that, the day it was issued, the requisition number, how many units were taken out of raw materials and into work in process, what was the unit price, and total price. And of course, it'll keep a running tally. And I do that for each piece of raw material. So I do that for my metal. I do that for my rubber. I do that for my engine parts. When I'm transferring materials from raw materials to work in process, there needs to be what we call a requisition form. That's like saying, hey, raw materials department, I need one piece of metal, one engine part, and I need some rubber for making this car. So they fill out what's called a requisition form. I'm requesting, that's what requisition means, I'm requesting the raw materials for this job. And so this is an example of requisition. I can track the amount of direct materials I've requested, requisition, for each job, and I could find the total amount of materials I've requested for each day, for each month, just by adding up the jobs. So I add up all the jobs, all the different jobs. Job 15, job 16, 17, 18, 19. I add all those up to get my total direct materials for that day or for that month, whatever. And it's good to know this information because you need to make a journal entry to take the value of the raw materials out of raw materials and put it into work in process. You're taking it out of raw materials inventory and you're putting it into work in process. We do that through a journal entry. And in this journal entry example, I've added up jobs 15, 16, 17, 18, 19. I got $1,800 in raw materials. So that's based off my requisition forms. So I debit work in process inventory to increase my work in process inventory. And I credit raw materials inventory to decrease my raw materials inventory. Remember, I'm taking the raw materials out of raw materials and I'm putting it into work in process through those requisition forms. So all I do is I just add up all of the requisition forms from each job to be able to tell me that amount. Make sense? Y'all still awake?
Makes sense.
All right. Sounds good. So that's from raw materials.
I have a question.
Yes, Mr. Tinsley, please.
So when you're taking, hypothetically, you're taking money from one account to pay the bills on another account, is that?
Nope. I'm simply transferring. I'm simply transferring the value of the raw materials inventory and I'm putting it into a different kind of inventory. Taking it out of raw materials and putting it into work in process. So I'm not paying anything. All I'm doing is I'm just taking it out of one inventory and putting it into a different inventory. Make sense?
I'm still confused. So if you're not taking money from one department and putting it into another,
That's I'm not taking the money, I'm taking the value. So like I'm not taking $1,800 out of one checking account and putting it into another. No, it doesn't work that way.
okay.
It's
okay.
not cash. It's the value of the inventory.
Okay.
Does that
Now
make
I
sense?
got it. Yes, I got you.
Awesome. Cool. Thanks for asking the question. That's a good question. Yeah, very good question. So now that we covered the materials part, now you know we got to talk about the labor. So labor. There are employees that complete each job on the assembly line. Okay. I got employees on the assembly line manufacturing cars. Each car is a job. Employees spend a certain amount of time completing each job. I need to track that time. So I use what we call time tickets. The time tickets show me the exact number of hours each individual employee worked on each job. So employee number 1 worked 5 hours. Their hourly rate is $20 an hour. So I multiply 5 times 20 and I apply that cost to job 15. Employee 2 worked 2 hours. They make $15 an hour. So 2 times 15, 30. I apply that to job 15. Employee 1 worked 5 hours at $20 an hour on job 16. So forth and so on. I'm adding the time tickets and applying them to each job, respectively. How much time did you spend working on car 15? How much time did you spend working on car 16, 17, 18, 19, etc.? Number of hours times the hourly rate for each employee. That's direct labor from time tickets. So that's direct labor. You know, the direct labor is the employees are actually doing the assembly. They're actually putting the cars together. Then we have indirect labor. Indirect labor, that's your supervisor's salary. That's your indirect time. Okay. We put that to indirect labor. And indirect labor, because it's indirect, it's part of factory overhead. Anything indirect is factory overhead because we cannot directly trace it to the cost of each job. Here's an example of a time ticket. Here's an employee. The employee has a unique number. They worked on a specific job, car number 15. It took them 3 hours to perform their specific job. At a rate of $20 per hour, That gives me a total cost of $60 for this one employee working on this one job. This is an example of a time ticket. Of course, I'm going to have more.
What
Go ahead.
question?
Sure. Yes.
So let's say, for instance, this person, the one that we're looking at right now.
Mhm.
So that's the total of hours they worked is 3 hours.
Just on this one job. So that employee probably worked on other jobs as well during that same day.
Okay. So you take that times the hourly rate to get the take home, the take home pay or something like that, right?
No. So this time ticket, remember, the total cost of a product to manufacture a product is direct labor, or I'm sorry, direct materials, direct labor, and factory overhead. The way we find the cost of direct labor is we find the amount of time that each employee worked on that job, multiply that by their hourly wages to get our total cost to apply to that job. This is not like a time ticket for a payroll stub. That's different. This is
Okay.
this is to know how much cost I need to apply to the total cost of each vehicle. So this,
Okay.
in other words, this employee worked 3 hours at $20 per hour for this one car. They probably worked another 4 hours on another car. They probably worked a couple hours on another car. Okay. And I'm taking that allotted time and applying it to that car. It has nothing to do with how much they're being paid.
Okay.
Yep.
Okay. I got it confused. I'm sorry.
That's
Thank
all right.
you.
No, that's fine. I'm glad you asked the question. Thank you so much. It's a good question. So we can see that each job has a certain amount of labor associated with it. So, for example, that one employee that I just showed you, that's $60 in cost on job number 15. It says job 15 was $1,000 for labor. Why is that? Because that's just one employee. That one employee, what did they do to that one car? 3 hours. They probably did the wiring or something. Then I'll have another employee doing something else to that car, doing the engine components. Then I'll have another employee doing something else to that same car, putting the doors on. Another employee will put the lights in. An assembly line, right? It moves down the assembly line. The employees are stationary. The car's what's moving down the assembly line, and each employee is doing something to that car. And so I need to know how much time each employee is touching that car. That's how I track each employee. I associate the cost to that car. So I had $1,000 total dollars in direct labor spent on car number 15. On car 16, $800. On car 17, $1,100. On car 18, $700. On car 19, $600. At the end of the month, the day, whatever, I need to know how much total labor to apply to my work in process inventory. Because remember, the total cost of a product is direct labor, direct materials, and factory overhead. I've already added in direct materials. Now I need to add in direct labor. So the way I do that is I debit work in process inventory to increase the total value of my work in process inventory. And I'm going to credit factory wages payable. Remember, payable, that's a liability. What I'm doing there is I'm increasing that amount that I need to pay to my employees for the amount of time that they worked. And now, we talked about direct materials. We talked about direct labor. Now you know we got to talk about factory overhead. Because direct materials plus direct labor plus factory overhead equals the total cost of a product, a job. So here we go. Earlier, I had mentioned that there are a couple of ways of determining factory overhead. There are a couple of ways of factoring what we call the factory overhead rate. Factory overhead rate can be what we call predetermined. A predetermined rate is set by management. And they say, oh, the factory overhead rate is a percentage of something. In our earlier example, we said it's 160% of direct labor. That's called a predetermined factory overhead rate. They're just applying some factor. So, what we do to find the predetermined factory overhead rate is we estimate the factory overhead cost for the year. And we divide that by the estimated activity base. The estimated activity base could be the amount of hours my employees will work for the whole year. It's all estimates for predetermined overhead factory rate. Once I find that factory rate, I multiply that by the actual amount of the activity base used. In other words, my factory overhead rate is 160%. I multiply that by the actual amount of direct labor, or the actual amount of hours worked. The actual amount times the factory overhead rate, that gets me the applied overhead, and that's the amount that will go on the job order cost sheet. Does it kind of make sense? I know it's a lot. This one's a little bit more detailed. Good so far.
Good so far.
Awesome. Thank you so much, Aisha. I appreciate that. Okay. So let's break it down a little bit further. Predetermined factory overhead rate. It's based on the direct labor that we apply to our jobs. In our example, anyway. That's what this particular company does. So we take the estimated overhead cost divided by the estimated activity base. We had said that our rate is 160% of direct labor. So I take my total direct labor cost and I multiply that by 1.6. 1.6, guess what? That's 160%. 1.6 times 100 is 160%. So 1.6 is our rate. So 4,200 times 1.6 is 6,720. I got those numbers by adding up all of the jobs to get our total direct labor cost times the overhead rate equals the total applied overhead. Make sense? Just want to make sure everyone gets this in because this one's pretty important. Okay. at the end of the month or the year, or that's it. That's the end of the month. At the end of the month, I debit work in process inventory to increase my work in process inventory to add the value of factory overhead. And I credit factory overhead to recognize the expense for factory overhead. To find the actual overhead used, we take the cost of our indirect material, indirect labor, and other factors into consideration. To recognize the indirect materials used during the month, we debit factory overhead and we credit raw materials inventory. What this does is it reduces our raw materials inventory based on the usage of our indirect materials. Remember, indirect means it makes up a small amount of the cost. We cannot directly trace it to each job. An example of this would be an adhesive, glue, small components. They don't make up the majority cost. That's why they're indirect. But I still need to take them out of inventory. We also have indirect labor. As you recall, indirect labor would be things like supervisors' salaries. We cannot trace those to jobs directly, so we apply those to indirect labor, which is a part of factory overhead. We debit factory overhead and credit factory wages payable. These are all what we call adjusting entries. You probably remember that from Principles of Accounting 1. We did this concept called adjusting entries. So at the end of the month, we adjust for the usage of these types of things. And one of the last adjusting entries that we make is to record the actual overhead costs for the month. So we debit factory overhead, and then we credit the actual usage for each thing. Accumulated depreciation, rent, utilities, prepaid insurance. What this does is it records the actual usage of factory overhead for that month. It's a general journal entry. This is an adjusting general journal entry that we make at the end of each month. Of course, the amounts will be different depending on the usage. So let's bring it all together. Raw materials plus work in process plus raw materials plus work in process plus, direct materials plus direct labor plus factory overhead equals the total cost of our product. On our income statement, I take my revenue from sales minus cost of goods sold equals gross profit minus expenses equals net income. On our balance sheet, we have assets, liabilities, and equity. On our balance sheet under assets, we have cash, accounts receivable, inventory, property, plant, and equipment. Within inventory, we have raw materials inventory, work in process inventory, and finished goods inventory. In manufacturing, the materials flow from raw materials into work in process, And then when the process is done, it flows out of work in process and becomes cost of goods manufactured. And then when it's sold, it goes from cost of goods manufactured to cost of goods sold. That's the physical flow of our cost. Just a nice flow chart. I like that flow chart. It's nice. This one's a little bit messy. This kind of shows us a summary of the cost flows. So we purchased some raw materials. Then we took some raw materials and used them in work in process. That's number 2. Number 3 is I used some direct labor in my work in process. Number 4 is I used some indirect materials and applied it to factory overhead. Number 5 is I used some indirect labor and applied that to factory overhead. Number 6 is I took all of my factory overhead and applied it to work in process. Number 7 is anything additional that is applied to factory overhead. I take my total work in process, apply that to finished goods. It goes from finished goods to cost of goods sold when I've sold it. It's number 9. Just kind of shows us the flow. It's the flow. Yeah, it's fun. I like it. And this is a nice summary of all of the general journal entries. These are the adjusting entries that I make to shift materials from raw materials to work in process to finished goods. You see how it works. And these adjusting journal entries help us to track the flow of the cost. This one's kind of important. It's called the Schedule of the Cost of Goods Manufactured. Remember, this is managerial accounting. Principles of Accounting 2 is managerial accounting. You're not going to see the schedule of the cost of goods manufactured for any company. That is what we call an internal document. This is an internal report that management uses to understand the cost of goods manufactured. Direct materials plus direct labor plus factory overhead applied equals the total cost of goods manufactured. Plus any work in process equals total work in process. Minus work in process at the end of the month equals total goods of cost manufactured. Sometimes we need to make adjustments to factory overhead because sometimes we apply too much factory overhead to a job or not enough. We call that underapplied or overapplied. Sometimes I put too much of a percentage in, sometimes not enough. And so we make some adjusting journal entries. And it depends whether it was underapplied or overapplied. It's always going to be off by a little bit. I mean, that's normal. How do we determine, or how do we make the adjustment if we've overapplied factory overhead? In other words, I didn't apply enough. If I didn't apply enough, I debit cost of goods sold and credit factory overhead. What that does is it increases the cost of goods sold amount and increases my factory overhead. And I would do the opposite if it was overapplied. For service companies, it works kind of similarly. For example, let's take a dentist or let's take a repair service business. Service companies don't have raw materials and they don't have finished goods. It's a service. You know, an airline doesn't have raw materials or a finished good. They're just flying the plane. Okay? So, service companies don't have those, but they still track their costs. The vast majority of it's applied to factory overhead or to overhead. So they apply overhead plus indirect labor. That is their overhead cost. They apply direct labor. But we see that they don't have like a raw materials inventory. They have service and process inventory, which becomes cost of services. It's similar. Services are similar in nature, but they're different because they're not making products, they're providing services. But I just wanted to show you this because even service businesses have methods of tracking their costs. One way that we can track costs for a service company is by examining the direct labor and the factory and the keep saying factory overhead and the overhead. Direct labor, we take the number of hours worked times the hourly rate, add it all together, get total direct labor. For overhead, we take the hours worked times the applied factory overhead rate. To get total overhead, we add direct labor, total direct labor plus total overhead to get the total estimate job cost. And again, this is for a service business, so it doesn't include materials because it's a service. You know. Any comments, questions, concerns? Anything at all on job costing? Did I do an okay job? Thank you.
No.
Very good. Thank you, Ms. Rhodes. Just wanted to make sure, you know, I'm trying
Like I said, you explain it very well, and that way we really can understand it. You know, you do the breakdown pretty much understandable.
Cool. Awesome. Thank you so much. Yeah, I just try to make everything as digestible and understandable as possible because I feel it's so important. And you know, all this information builds on what you've already learned. Yeah, that's what accounting is about. You know, keep building on what you've already learned. And so that's why it's important to grasp these types of concepts. The good news is in the classroom, if you want some practice on job order costing, just go to Chapter 19 exercises and go through the job costing exercises. This will help you to get some hands-on experience with it and just kind of to help you learn it a little bit more. You're more than welcome to do that. I have exercises for pretty much all the chapters for the most part. There's a few that I don't. So before you attempt your homework, my recommendation is to review the PowerPoint presentation, look at your notes from today's lecture, go through the exercises, and then attempt the homework. Remember, you have 2 attempts on every homework assignment and quiz. All assignments are due by Sunday night for each week. That has not changed. It's been that way since the beginning of class, and it'll be that way for the next 12 weeks, right? Are there any comments, questions, or concerns that I can help any of you with at this time?
No.
Okay. Remember, if you ever need anything, you can email me, call me, set up office hours, do whatever it takes. Remember, I'm here for you. I'm here to help. So as always, I want you to please stay safe. Wash your hands, do the right things, and I'll see you all again next time. Thank you so much.